I think it looks pretty ominous. I think here we are, the last month before Mad Magazine goes out of production next month. Its mascot, of course, Alfred E. Neumann, had the watchword, "What me worry," and we look at perhaps his cousin, Adam Neumann, the founder, would be, what we worry. We got lots to worry about WeWorks, and I think we have problems with the concept. We have problems with basically how the business model is working, and certainly big problems with the CEO himself. He's a tremendous showman, but so is Mark Zuckerberg, but he has the technology at Facebook, and I've been critical of his leadership style. Same with Elon Musk and Tesla. Obviously, there's incredible technology there. I've been critical of leadership style. Here, what's there? Just beanbag furniture and some fixed leases on space that'll be a challenge in a financial downturn? I don't get it. There's plenty of competitive movement out there in this sphere.
Dan, what's the truth of this, though? Because he may sell up to $700 million. We don't know the exact number to be sure, but he's actually got a lot more. He's got options. He's got loans against stock. So what is his stake now?
So here's the stake. So for starters, Neumann at this moment is still the largest single shareholder in WeWork, more than SoftBank, more than anybody else. The $700 million cited by the Wall Street Journal is existing sales, and the last one our reporting shows was in October 2017. So it's not that he is cashing out. He got cash. About $300 million was sales of equity. About $400 million was loans against the value of his stock, some of which he used to buy buildings that then leased out to WeWork. It's also our reporting today over at Axios that he does not plan to sell into the IPO itself. He won't sell shares in the IPO, so his number will stay fixed.
How odorous is it when a company owner buys buildings and then causes the company that he controls to take the leases in the buildings he owns? Does that smell? In a way, that smells as fishy to me as getting out ahead of an IPO.
It's like Aubrey McClendon at Chesapeake Energy, where it's somehow every time Chesapeake Energy was out there to try to buy a new gas field, by incredible coincidence, his family 2 weeks earlier had bought that priceless property that they had to then repurchase from him. It seems very suspicious, and today, you're the expert on this space, but I don't know. I'm just a school teacher. I look at the arithmetic here. If they've got $11 billion of capital have gone in for this puffed up valuation somehow of $47 billion, $10 billion is from Matsuyoshi's son. I don't get how you say that he's a larger owner than that. He hasn't put that kind of capital in.
Dan?
He hasn't put the capital in, but two things on that. One, Adam Neumann didn't put the capital in, but the day the company started, he was at 100%. So every time, whether Moss or other venture capitalists, it's the company, but Adam's essentially selling the shares off. On the
it's
other
all just
point,
puffed
though,
up valuation. It's nothing really at risk, though. I mean, this is $47 billion. His major competitor is in far more cities, and they're worth $2 billion. IWG is worth $2 billion. And they're in like 110 cities. These guys, 110 countries. With all the promotion and puffery, these guys are in 32 countries.
With more exposure within those countries. Can I say on the company or on the building thing? There's two ways to look at this. You can certainly look at it as self-dealing, but it's important to note, unlike Aubrey McClendon, Neumann has a very, very small number of buildings compared to the number of buildings WeWork is in. And the argument, and take this for what it's worth, the argument Neumann's people would make is those were buildings purchased very early, 5, 6 years ago, and those were made in part because WeWork was having a hard time getting leases because landlords didn't view them as a stable tenant.